Good afternoon and welcome. Today we will talk about a new feature which Microsoft has added that's called netting. So, when there is a customer and vendor balance, we would like to net it so that we have to transact minimal instead of doing an AR and then an AP. We net the amount for the same business entity, and then depending on the balance, you can either make a payment or make a receipt. So this also helps unnecessary payments or receipts for the company. They just consolidate and then generate the desired resultant transaction. There are some companies for audit purpose, they would like to keep AAP and AR separate. So in those scenarios, the netting feature will not be helpful. But for the most of the businesses, they prefer netting the amount. So let's take a quick look on the setups and then how the transactions occur. To begin with, for this feature, we need a journal to be created. So it's under general journal. Let me take a look. General ledger, journal names. And here there is a new type called netting. Let me just see if I can find one. So here's one journal which is of type customer and vendor netting. I called it as netting. The name of the journal is netting and it is of type customer and vendor netting. Then the next item is having a main account. So when you do a transaction, netting transaction, you need a bridging account. So you create one. It's like a in between account. From AP it goes to the bridge account, and then from there it goes to AR, or vice versa, depending on which amount is higher. So on general ledger again, and let's take a look at the main accounts. And I created one called bridging slash netting. So that's the one. So we will use this account for our bridging. After we create the journal name and the main account, we then have to create the netting agreement. So for the netting agreement, we need to identify the customer and vendor accounts, and basically they are customer vendor account of same business entity. So if our company is transacting with another company and we take products or services from them, and on the other side we also sell to that particular company, then you have two accounts, one in accounts payable, another in accounts receivable, but the business entity itself is the same. So for those kind of entity, you would like to create a netting agreement, and that's defined in cash and bank management. And if you see, there's a netting feature. This is a feature which was recently introduced by Microsoft. I think it is in 10 or 41 or somewhere in the 40s, 40 or 41. And here, as you can see, there is a netting agreement. So let's take a quick look on what the netting agreement has. I created one netting agreement between the two. One customer is US 001, and then you have a vendor account. So technically, these two accounts corresponding to one business entity. That means the party ID, the address, all these information are same for these two accounts. So we are assigning the customer account and vendor account, and you have the flexibility to set the start date. What this means is if there are any transactions prior to this, the 1/1/2015, those will not be considered for netting. Anything after 1/1/2015 will be considered for netting. And you define these rules, and then you can either automate it or do it manual. For the purpose of discussion and going over certain details, let's do a manual netting. So now that we created the agreement, let's take a look at what we can do on the agreements. Based on that agreement, I next go to the customer and vendor netting, and here system will pull whatever is on the customer balance. So as you can see, this customer has a balance of 129,000 and the vendor account has a balance of 49,000. I can then use this agreement and create the netting. I'll select some of the if free text invoices or customer invoices, and I look at the vendor invoices and I can then just select few or all of them and net it. So here you can go to create netting, and as you can see there are few customer open invoices and there are few vendor open invoices. Now what I will do is I'll select one of them here, and maybe I'll select this one or even the first one just to keep it simple. So I have a receipt. I'm expecting a receipt against an invoice. It seems to be a free text invoice of 200 odd. And then I have a vendor payment of 558. So if I net these two, my net result will be a vendor payment of the difference for our 558.09 minus 268.13. So now I can select more than one customer invoice. I can select one or more vendor invoices. But for the purpose of this demonstration, I'm selecting one on top, one at the bottom. And then I should say mark selected, and here mark selected. So that's important. So I select, make some reviews, and then I actually have to mark them. Now, after I mark it, I also have to say which date the transaction has to be posted. Let me reduce the screen. And here you can see that the posting has to happen. So here I can give the date. I'll just set it to current date. And I also have the option to print the advice. So let me go ahead and select the print as well. And once I mark these two, I then go ahead and post it. It will take some time. Excellent. And let's see what the advisor is saying. Awesome. So here in this particular screen, you will see that the customer transaction for the invoice FDI 002, which is of $268.13, is being netted against the vendor invoice 10017, which was of $578.09. So once the netting is done, the balance would be 289.96. So that's the advice. This can be printed or even documented against the transaction. So let me close this. And now let's go back to the customer and vendor balances. So as you can see, the amount has been reduced. Go ahead. It was earlier 49,000 odd. So now it's been reduced by $49,278. And if we go to the voucher, so let me go to this particular transaction, customer account, and then I'll see customer transactions. And here you will see that there is one netting occurred for the $20, $268. And if you see the voucher, there is a bridging account which we created. So the amount has been transacted through that particular bridging account. And if we go to the vendor side too, you will see the same transaction from the bridging account to the vendor account. So you can take a quick look. Let me go to this particular account now on the vendor side. And here let's look at the transactions. And here you go, $268.13. And if you look at the voucher, you have the bridging account against the vendor account. So that's basically the netting feature, and this comes very handy when you have a lot of transactions back and forth on the AR side and AP side. So you can net it, and then you can only process one side of the payment or receipt. Additionally, there are netting rules which can be added to facilitate this process. You can define various netting rules, and you can also automate this. So, as soon as the vendor payment is processed, or vendor invoice is processed, or customer invoice is processed, system will automatically pick the netting rule, and if it is set for automatic, it can be processed automatic, and you don't have to worry about looking through and doing the AP and AR side. So that's about it for now, and we will see you soon on some of the new features of banking and all the nice automations which can happen on the banking and BI import. Thank you so much. Enjoy your day. Bye bye.